SoFi has been in the spotlight today, and I want to break down everything that influenced its movement, the latest updates, and what investors need to keep an eye on. Let's dive right in. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi stock saw a decline of 1.98%, largely tracking the broader market. The price fluctuated between a low of 14.79 cents and a high of 15.25. The main market shakeup stemmed from statements made by Federal Reserve officials. Two key speakers, including Powell and another Fed representative, reinforced the idea that cutting interest rates too soon could lead to increased inflation. Because of this, they emphasized the need to maintain rates longer than previously expected. Growth stocks, including SoFi, tend to be sensitive to such news, which led to a sharp reaction from the market. The probability of a 25 basis point rate cut in the March 19th meeting dropped significantly to just 4.5%. Even the expected rate cuts for May 7th and June 18th saw declines, while July 30th remained steady. This suggests that the market is now factoring in the likelihood of a rate cut in late July rather than earlier. Powell also dismissed concerns about a looming recession, but remained vague on the impact of tariffs, a topic he usually avoids discussing. His remarks will continue into tomorrow, so investors are closely monitoring any additional insights. During the last hour of trading, a further dip occurred, likely due to anxiety over the upcoming Consumer Price Index (CPI) report. This data could significantly impact market sentiment depending on whether inflation is slowing as expected. Shifting focus to company-specific news, SoFi announced enhancements to its SoFi Plus Premium membership, now offering over $1,000 in annual value through various perks. These benefits cover mortgages, insurance, and even travel, strengthening SoFi's all-in-one financial ecosystem. While this expansion is a step in the right direction, better marketing is necessary to maximize its impact and attract more users. Marketing was actually a key topic in a recent fireside chat featuring SoFi's CEO. The discussion lasted about 40 minutes, largely reiterating previous earnings reports. However, one noteworthy point was SoFi's commitment to reinvesting around 70 cents of every dollar back into the business. This reinvestment aims to improve customer service, expand marketing efforts, hire more staff, and drive innovation. Many investors believe that SoFi needs to be more proactive in launching new products, especially when competitors like Robinhood continue to experiment with new offerings. Looking ahead, the CEO hinted at major developments coming in 2025 and 2026. While the company remains financially strong, some feel its innovation strategy has been lacking. That said, projected compound annual growth between now and 2026 is estimated at 25 to 30%, which is a promising figure. The fireside chat didn't trigger a significant stock movement, but it did provide reassurance regarding SoFi's long-term vision. Turning to short interest, the latest data reveals that 11.67% of SoFi's free float is being shorted. The Nasdaq provides these figures bi-monthly, and as of January 30th, 126.37 million shares were shorted. This means that from January 15th to January 31st, short sellers returned roughly 6 million shares, which was more than expected. While it's positive to see short positions being covered, it didn't have a major effect on the stock price, likely because the price movement during that period remained relatively flat. Options data also presents an interesting picture. The total dollar premium reached $19 million, with $16 million allocated to call options and $3.5 million to puts. Approximately 60% of options activity leaned bullish. The put-to-call ratio remained in line with previous trends, suggesting that investors are cautiously optimistic. However, expectations for SoFi's price in the near term are shifting, with many anticipating it to trade between $16 and $16.50, while bearish traders see a potential dip below 14.50 cents. A crucial factor in determining SoFi's short-term movement will be the CPI and Producer Price Index (PPI) data. These reports will shed light on inflation trends and could significantly influence interest rate expectations. Large-scale transactions in the secondary market above $100,000 have been decreasing in frequency, but institutional interest remains stronger compared to previous years. This suggests that bigger investors are still paying attention, albeit more cautiously. As for technical levels, SoFi closed at $14.83, placing it between two key support and resistance zones. The critical support level sits at $14.70, while resistance stands at $15.12. If CPI data is favorable, a push above resistance is possible, but if inflation data disappoints, SoFi could test its support levels. From a technical perspective, SoFi remains below its 50-day moving average, and its stochastic RSI indicates oversold conditions. If positive news emerges, whether from SoFi itself or broader economic data, there is a potential for a rebound. A move toward the 50-day moving average at 15.74 cents would require strong buying momentum, possibly driven by value investors seizing the opportunity. Overall, SoFi continues to face external macroeconomic pressures, but its internal growth trajectory remains solid. While some investors are frustrated by a perceived lack of innovation, the company's reinvestment strategy suggests that significant developments are on the horizon. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.